Meta stock. We're starting off with Meta stock today. Morgan Stanley believes that Meta has 50% upside. Right now it's at $200. Morgan Stanley believes, hey, this bad boy can go to $250. Remember, Meta stock fell to $88. It was the lowest it has been really since around 2014, 2015. And the stock has since rebounded quite significantly, now up at $200, primarily because of a factor of a couple things. Number one, TikTok security concerns have definitely allowed Meta investors to feel even more confident in their investment. TikTok has taken away a lot of market share in terms of just the ability to monetize the worldwide attention of a humanity and of a species. Meta, again, their products really control 3 billion people's attention, 3.7 billion people's attention monthly in the combination of Facebook, WhatsApp, and Instagram. Facebook this year, in March, actually crossed 2 billion daily active users. So for all the people that say Facebook's dead, for 2 billion people every single day, it is not dead. And it is one of the primary sources in which they consume information, the way they get information, the way they get the news, all that type of stuff. Instagram has about 1.93 billion DAUs. I believe WhatsApp's also at 2 billion DAUs, and they barely began to monetize WhatsApp. TikTok was taking away some of that attention and a significant amount of it over the past couple of years as TikTok has started to wind down, not in terms of its relevance, but just in terms of its overall growth. If you look at their download numbers, they're down, usage numbers are down, still a huge platform, but not growing as exponentially as it was in 2019, 2020. Meta has been able to regain a footing. And with the potential of TikTok being banned, or at least the potential of TikTok not being as safe, Meta investors are also feel that Meta is on the way to go. So that was the first thing that has improved Meta. The second thing is that investors realized that $88, this was an absolute steal. You know, investors really understood the potential of something that has 2 billion DAUs, averaging almost $32 billion of revenue every single quarter with incredible margins. The only thing that has been hurting Meta has really been this Reality Labs metaverse focus, which I'll talk about in a little bit. But I mean, a lot of investors are starting to feel that the metaverse is going to be a losing category. And that the losses that Facebook is taking on it is just not worth it. And, you know, eventually Facebook will decide what they want to do. Final thing before we get into this video, layoffs. Facebook has cut over 25,000 people. That has really helped the stock, and investors and shareholders feel more confidence that Facebook is a play to be in. So let's take a look at why Meta is rising on Morgan Stanley's upgrade.
We're a few minutes till the opening bell, so we've got some movers for you. One of them is right up there on your screen. It is Meta. The shares are up about 3%. That's after Morgan Stanley raised its rating on the social media giant, noting Meta's ongoing efforts to slash costs in its year of efficiency. And if that sounds familiar, well, it's because we were just talking about a similar theme at Amazon, because this is really the theme for large cap tech right now, Brad. And this note is interesting because obviously we knew that this was going on, but it's sort of a Morgan Stanley reassessment of this. The price target, by the way, going to $250. So it's a $60 increase for Brian Nowak over there at Morgan Stanley.
Yeah, I mean, for Meta and all of the spending that they have been extremely aggressive about within the metaverse, and how all of their different ambitions have started to dovetail even more so into what the hardware of the future of their platform might look like too. I think if there is any positive to come, at least early in this year, it is the efficiency that they're looking to drive right now. And that has gotten a positive review from the street thus far. And even more of kind of a positive note being signaled here, especially off of some of the lows that we had seen of late last year. I think perhaps the bottom could be easily set in for Meta here, given the move that we've seen over the past 6 months. And now even looking out towards the future and what the efficiency structure may look like, but then also how they're going to prioritize for their investors, just making sure that profitability is the chief priority, even as they navigate what is an uncertain, to say the least, 2023 here on an economic standpoint.
Indeed. And a couple of other interesting notes to pull out from Nowak's note. One of them is that it's not just a 2023 story for Meta. He thinks this is really a profound cultural shift at the company. And he had been had a buy rating in the company for a while, downgraded it to equal rate in October, and now this upgrade is coming. He says the year of efficiency is more than just a 365-day change. It is rather a structural and cultural pivot to operate leaner and with a greater focus on investor returns, even through.
So as we can see, Meta has a lot of things going for it in terms of how shareholders and the investor community writ large are trying to approach it. Someone in the chat says, Everclear, how much Meta did you buy, Amit? And he also said, bless you, because he saw me sneeze. So thank you for the bless you. I bought no Meta. And so as bullish I am about Meta, I ended up not allocating capital towards Meta at the time. I actually ended up purchasing some different stocks. more around SoFi, Tesla, and Palantir. Probably was a mistake. Should have purchased some Meta at 88. Hindsight is 2020. That was, I believe, the bottom in October. We're looking at October 13th, October 20th, around that range. Meta started to bottom. And personally, it made sense to buy. I didn't end up pulling the trigger. And now at 200, it's a little bit harder to justify pulling the trigger just because they have a lot going for them, but they've already run up so much. And I think this is the same problem that exists with a lot of stocks. Same thing with Nvidia, right? Like Nvidia should have bought it at $109. One could have argued it was overvalued at $109. Now it's at 260. Do you really want to buy it at 260? It's like, yeah, they do have upside to 340, but and so this is the peculiar situation. You can't win all of them as you're trying to get some of these bottoms, and it's very difficult to find the bottom in the first place. But that's why the investment thesis needs to stay intact. Now, I did buy Meta at 325 back in February 2022. And that was also the wrong decision, right? Because obviously we saw the collapse. I eliminated the Meta position, DCA'd into Palantir at $12 and then took like a $1,000 loss on that position. But ultimately, when Meta got down to 88, it probably should have been the trigger to re-enter. Didn't end up re-entering. Lowest I bought Meta was at 105, average is at 135. Yeah, and that's not a bad average at all. So, what is Meta's future going forward? I think the number one thing to understand about Meta that a lot of people don't understand is the content discovery play. And I feel like I'm sometimes the only one that talks about this because I care so deeply about content discovery. I have an entire startup that's dedicated to figuring out how can we get content discovered in a more meaningful way. The initial thesis, and you can go back to my YouTube channel back in February 2022 of why I bought Meta at 325, is because my friend Ryan was starting a smoothie store. And the first place he was going to advertise his new smoothie store was Instagram and Facebook. And it just ticked in my head, this is a realization a lot of investors have had over the past 10 years, but I was just like, there is no other place to advertise in the context of bringing a new product out into the world outside of Facebook. I mean, there are very, very few places in the world where you can go and pay this thing a little bit of money, really a little bit of money, 20, 50, $100, and start getting exposure, much less posting organic content and also getting organic exposure for free. And so, when I started to analyze it from that perspective, that thesis really has never changed. The market has changed, but that thesis has not changed. 2 billion people still use the product. You've got TikTok with all the concerns they have. You've got Google search that is not going away anytime soon, but with the advances in ChatGPT, you're at least looking at search like, are people really going to start searching and then clicking on ads, which has been, a 95% margin business for Google over the past 2 decades? And if that does go away, how do people discover advertising? How do people discover new products? Well, the only way is if they get to see that stuff. And the easiest way was you search for something, boom, it pops up, first 3 links, you click, there's a direct relationship from an advertising perspective for you to be able to discover content. If that doesn't exist, then how does someone discover content? Well, the number one way is if you're scrolling through a feed, whether that feed is YouTube videos or thumbnails or Facebook posts, and something pops up. And so I think with the advancement of search engines that are giving you answers and not ads, and I don't know if that ultimately is what ChatGPT becomes on a global level like Google, but let's say it captures a little bit of the market, which we're already seeing it's doing, then where are people going to advertise for cheap? It's going to be in a feed where, and again, what are these feeds? They're just inventory of supply, right? People are, think of YouTube feed, right? 5 people upload a video. You have 5 thumbnails and titles. YouTube shows you those 5. And in between scrolling through those 5, they place an advertisement that they think you might click on. And as a result of that, they have now allowed advertisers to gain access to your attention and allowed you to potentially discover a new product, which then leads to this advertising relationship that results in $30 billion of revenue for YouTube every year. If search goes away and there's not that many products in the world that can meaningfully show you an ad as you're scrolling through something because they just don't have the economies of scale, then Facebook becomes the only player left in town. The only way I think Facebook, Meta, etc. fails is if people stop using those products, if people stop using Instagram, WhatsApp, and Facebook. And for the past decade, that hasn't happened. TikTok has been the biggest threat, and TikTok has not been able to take away a meaningful amount of market share. LinkedIn is in its own category. Snapchat doesn't have a chance. YouTube is there, but YouTube is primarily suited for video. So what's left, right? What is the next network that's actually going to dethrone the king? And I don't see those networks existing. Now, in terms of the metaverse, not excited for it. Personally, I do not think people are going to spend time in a headset. So that's also a big apprehension I had towards buying Meta at 88, because I was like, if they're going to keep losing $16 billion a year on this metaverse, I'm not excited about it. But if, I don't know if they completely pivot, but if they stop spending as much and the metaverse kind of becomes a thing, but it doesn't become the main thing over the next 5-6 years, Facebook probably has a lot of upside just on the advertising business alone. It's just the problem is they're using the advertising business, which is like high margin, to subsidize something that is unprofitable, massively unprofitable. And unless that thing actually becomes profitable, you can keep laying off people. But if you keep spending $16 billion a year on this thing that no one might end up caring about, that might become the Amazon Fire phone, right? And I don't think it will, but if it does, that's the only apprehension I have towards Meta stock. Other than that, Morgan Stanley upgrades Meta to 250. Let me know in the comments if you think that Meta is a buy.